Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing, so essentially the non-commercials in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that the market has just created a massive impulse to the upside. Now, this impulse is coming from a rejection away from a quite strong historical structure level for this market. We had, in fact, this zone which was acting previously already as resistance all across this area, and then the market with this impulse to the upside broke above the zone. So all that previous resistance, after it was broken to the upside, as we know, previous resistance, once it is broken to the upside, becomes support. So it was turned support. The market retested it as support and is currently still in the process of rejecting this level to the upside. So from a monthly standpoint, everything seems quite bullish and the market is still rejecting this quite strong historical support to the upside. However, at the same time, any uptrend is composed by a series of impulses and corrections. So essentially higher highs and higher lows. No market can just go and continue to go up in a straight line. At some point, every healthy market will need a correction before then continuing higher in order to bring new buyers in, which at that point can essentially push the price higher and continue the development of the uptrend with new higher highs and higher lows. If the market just goes straight up, at some point it becomes overextended, so it is not a healthy uptrend. So since here the last movement was the creation of this massive impulse, the next logical step would be for the market here to provide a correction. Now, we can already see how the market seems to be starting to provide a correction. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the structure is quite clear. We have a market which first was moving in this range. We had, in fact, the top of the range lining up at this area, which in fact was respected as the top of the range, so as resistance in multiple occasions. And at the same time, we had the bottom of the range here acting as support and respected as support in multiple occasions. Then we had the break above the range with this green candle, and at that point all that previous resistance became support here. The market retested the level as previous weekly resistance turned support, and since then has been moving with an uptrend from a weekly perspective, printing weekly higher highs and higher lows. The last move also here on the weekly was an impulse to the upside. So the next logical step would be for the market to provide a correction, even if it wants to continue higher, because again, every uptrend is composed by a series of higher highs and higher lows. So let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, what we can notice is that we had structure at this level. This zone was acting as previous resistance, which the market has now again broke to the downside, so it is currently still acting as resistance. Now, if the market will essentially confirm the break and then go for a retest of this resistance zone, that is where, in my opinion, there is an increased probability of seeing more institutional shorting, which at that point could further increase the probabilities of that correction that we wanted to see by looking at the monthly and weekly timeframes. Now, what do I mean when I say institutional shorting? Well, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we look at the data precisely for gold, what we can see is that especially with the last report, we had a massive decrease of the net positioning. We went from having 296.2k net positions down to having 278k net positions. So institutions have been moving back to the bearish side for gold, adding 12,000 shorts with the last report and closing 5,000 longs. We can see in fact how institutions have been building up their short positions, going from 48.8k all the way up to 87k. So essentially almost doubling their shorts, and longs are getting decreased, going from 387k down to 366k. So institutions have been decreasing their longs and increasing their shorts on gold. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, if the market here will successfully break and retest this resistance zone at that point, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, at that point I wouldn't be surprised to see a potential rejection to the downside, completing this daily impulse correction and impulse pattern to the downside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.